Hello, trading friends, and welcome back to Forex Focus, brought to you by IG. Huge employment data sending many markets back and forth, including US dollar continuing a little bit of a crash mode we've seen in USD in recent days, and then especially after the employment data that came out of the US. And of course, I'm talking about the non-farm payrolls, but out of nowhere, the unemployment rate is back in the spotlight as that came in at a surprisingly high level, sent US dollar lower, and has sent a bunch of major asset classes into interesting territories. We'll cover the unemployment rate and the non-farm number, all of it in just a second, but let's start with the US dollar price action. As you can see, a continuation. This is the daily chart, so that big move lower in USD isn't necessarily right off of this non-farm number that came out in March, but the most recent red bar there is the continuation, coming off of the high unemployment and potential for lower yields and lower interest rates from the Fed here in the US to come. And looking at dollar yen, we'll also look at the pound in a second as well, because that one has really gained against US dollar. It's been broad US dollar depreciation, but specifically with this dollar yen piece going from above 150 just a week ago to now challenging 147, getting into the 146 handle. Huge move lower in US dollar, a few hundred pips in the last week, with the emphasis really coming at the end of that week with the higher unemployment rate number. And we'll get to that unemployment rate in a second, but first, the headline number usually is non-farm payrolls, right? When you're talking about U.S. employment, you're usually talking about non-farm payrolls. And you might have seen this number coming in at 275,000 relative to the expected 200K, and said, man, that's a great number. I would expect this dollar to be rallying. Well, a couple of things. And before we even get to the unemployment rate, the number for January's non-farm was revised down significantly because, remember, this would have confirmed the trend of the December employment data, January employment data, and February employment data that just came out here the first couple of weeks of March. They all three would have been much higher than expected, and all three would have been in that, close to 300,000 jobs or beyond range, which is just historically really high numbers, really solid numbers in terms of U.S. employment. But this January number being revised down significantly sours that trend a little bit, right? Because it went from being those three big blue bars, close to 300K jobs added, to now being kind of a little bit back and forth. I mean, 229 is still a really nice number, but not nearly as big as previously thought. And then you also pair that with the unemployment rate, which, like I say, has not been really meaningful for the last several months, because it's been right there between 3.5% and 3.8%, and not really budging too far from that number. And you'd think, with, like we just talked about, that December, January, and February non-farm number all showing huge, 200 to 300,000 job gains, this was expected. The unemployment rate, obviously being kind of an inverse of that, was expected to be low at 3.7%, like it's been the last several months here. Comes in at 3.9%, and a little bit of, between that revision and this unemployment rate being the highest in the U.S. In the last 2 years, kind of showing some mixed signals for the first time here in 2024 for U.S. data, because January and February very strong, pretty much across the board for U.S. data. In February, some of the inflation data was starting to maybe show, okay, the U.S. is maybe slowing down a little bit. The data is maybe coming down a little bit. And then you saw that big revision. You saw the unemployment rate highest in the last 2 years at 3.9%, and starting to indicate that maybe there could be some steam gaining on the other side of this coin, because, yeah, until recently, it was a lot of dollar strength, and maybe they won't cut interest rates in the U.S. at all in 2024. And now, as we get into March, the odds are shifting in the other direction of they will likely cut rates a few times in 2024. And June looking like the high probability option, now almost 80% chance of this interest rate from the Fed being lower by the end of the June meeting. Still relatively low chances of a rate cut at the March meeting or the May meeting, but this June meeting is definitely starting to, like I say, pick up some steam here, as the rate cut odds are, for at least one cut by the end of the June meeting, are a little over 60%, and around 15% chance of more than one cut, and only about a 23% chance of unchanged interest rates at the end of the June meeting. And this high unemployment lends to that, right? I mean, if you've taken an economics course, you know that the central bank monitors a ton of things, but primarily employment and inflation. And if unemployment rates are moving higher, then they might want to look at some monetary expansion vis-a-vis lower interest rates. Whereas in the last couple of years, it's been that inflation rate moving higher, and then they've been looking at the contraction with higher interest rates. And now some of these numbers starting to move in that direction of lower interest rates, which a number of markets like stocks and the gold market have found that news well in recent trade. A market that has not, aside from U.S. interest rates themselves, treasuries and bonds and everything else, has been this U.S. dollar market. I mean, look at this rally here this last week in the pound, going all the way from below 127 up above 128 and really nearing 130, which would be the first time getting up to that level since spring summer of 2023. And really quickly, right? It feels like we were stuck in this range in most major forex pairs. The euro was trapped around 108. The pound was trapped around 126, 127. The dollar yen was right there at 150 for a few weeks. And now we're finally starting to see some trends. And for the time being, the bearish direction for U.S. dollar, very bullish direction for this pound, and starting to pick up steam also in that Japanese yen, Australian dollar. Euro's been a little bit mixed, but definitely higher. Same with Canadian dollar, mixed, but edging higher. We'll continue to monitor the data, not only in the U.S. Employment data will be a month away for the U.S. now, but there's inflation data coming very soon, and also that March Fed meeting that'll be here before we know it, as well as economic data in the UK and Japan and everywhere else. But for the time being, the higher than expected unemployment rate, highest in 2 years, moving this U.S. dollar lower and maybe signaling the trend of lower interest rates and U.S. dollar weakness to come. We'll see what comes with more data points out of the U.S. Thanks for watching.